They went into CCAA, and I was able to make an approach and say, hey,
get your asset back.
Can I get my asset back?
This is Jay Martin.
Mike, it's great to finally have you in the studio, man.
Great to be here.
Yeah, I'm looking forward to unpacking your current business. And, as I was preparing for this interview, I was thinking about the first time I heard your name, and it would have been like 2017, right after you sold Northern Empire, the Sterling project, to Coeur Mining, right? In like a record time, like 18-month turnaround, right? From acquisition of the property, which I think was around a $10 million acquisition. If I got that right.
$10 million. That was the price. Yep.
That was the price you paid. And shortly thereafter, raised $20 million from Coeur Mining, who subsequently bought you about a year and a half later. Does that summarize that?
They were a serious order in that $20 million financing. It
wasn't all them.
It wasn't all them.
Got it. Okay.
They would have had control at that point in time. They were 11.9 after that financing.
Okay.
And so reporting, so we could sort of, for lack of a better term, keep an eye on them. And then they progressively kept their position pro rata as we moved the company up. But yeah, I refer to Empire as a Roman candle because it just went straight up, exploded, and disappeared. And 16 months acquisition to acquisition.
16, yeah. And the bookends of that, acquired for 10 million, sold 60 months later for 120 million to Coeur. Fill in the blanks for us a little bit, just like high level. What did you learn from that journey? Obviously, Coeur invested early, I'd suspect, because they knew this was something they might want to buy down the road. And they were funding your exploration to de-risk the project and eventually acquire it. Is that effectively the story? Like what?
Yeah, I mean, the thing that was really interesting, there was a gentleman there that it was the VPX for Coeur, a gentleman by the name of Hans, and he got it right away what it was, and the potential of the property and the potential of the asset, and so he was the champion. And I actually remember having a conversation with him because we're live on the acquisition financing, and we got a deadline to make here. We got to have this done by, I think it was the 1st of May for the sake of the argument, and it's like, okay, we're in. But we got to go through all of our stuff on our end. And I remember the conversation. It's like, well, can you steer the battleship that quickly? Because it's a big entity, and they've got to go through all their checks and committees and stuff like
Coeur
that.
does.
Coeur does.
Yeah, they can't just write a check on a whim.
And so and I'm like, can you steer the battleship that quickly? And I remember it's like, I'm going to start paddling. And you feed me the information and I'll start paddling. I'm like, okay, fine, let's do it. Bang. And the phone went down, and the request came in, and we were a small team at the time. Empire always was small, hyper organized, and if we're just able to feed them information, anything he needed, we were able to turn around very, very quickly. And then ultimately, they were able to make their investment decision. I remember the phone call. They came in. They were the largest order, I think, in the book at the time. And it pushed it over the top, and we were able to get the deal done.
And that's how the acquisition, the origin acquisition. And so what did you have to show them along the way? And what got them over the line for the eventual buyout?
I think what the thing that was shocking about the Sterling was, and you have to forgive the geologist a little bit. The Walker Lane is generally one type of deposit, and the Sterling was another. And it had all the right geology for a truly large deposit. It had Roberts Mountain Formation, which is the host of the big Carlin type deposits up in the northern part of Nevada. And when we brought them down and were able to show them, look at, these are the controlling mineralization big structures, and they cut the right host rocks, the setup is there, and we had gold in the ground. You could see sort of Hans do the clickety click in his brains, and it's like, yeah, this is going to go big. And so they ultimately funded us. We did that acquisition financing. We did one more financing after that. That's actually a good story. I did it from a coffee shop in Heathrow International Airport.
Okay.
And then it was done. It was all over. One financing, two financings, gone. And it was quick.
Right. And a vastly different gold market.
vastly different gold market. The other thing that I learned a lot of things about that. To sort of towards the end of Empire, maybe it's one of the secrets, but we had an offer come in, and they gave us an offer, and it was a good one. And the board considered it, and ultimately I was instructed to go back and ask for more. And he's like, "Oh my God, guys! Like, are you serious? Like, we're gonna push all the chips in and maybe have them walk away." And that was a learning lesson for me, in that generally nobody puts their best offer first.
Sure.
And so in hindsight, it's like, yeah, that was the right thing to do. Wildly stressful at the moment, having to go have a conversation with the CEO of Coors. Like, I think you need to sweeten this a little bit. And it's like, oh my God, I hope that he doesn't walk away from it. Ultimately, they did sweeten the deal, and we were able to get it done. And then the other thing about it was we left meat on the bone. So we sold out for $120 million, all-time high for the shareholders. Everybody who ever bought a stick of stock of Northern Empire had an opportunity to make money. Coors subsequently sold the asset for $200 million with a $30 million milestone payment.
To Anglo, is that right?
That's correct, yeah.
Yeah.
So it's all become part of the, they call it the Arthur Gold Project down in southwestern Nevada. And if the ground that made up the Sterling project that the Coeur acquires gets more than 5 million ounces of total gold on it, there's a payment out to another $30 million out to Coeur. But Coeur, we made money for our shareholders on it. Coeur made money for their shareholders on it. And that was the other lesson. Like, try and leave something for those guys to make money off of, the acquirer to make money off of, whether it's by going into operations or by doing another deal. And I mean, I ultimately believe as well that Anglo is going to make a fortune off that property as well.
You do?
Oh, absolutely. We were the right people to own it at the time. We could...
Why do you say that? What does that mean?
It was a forgotten asset.
Okay.
And so in the capital markets, it was unknown. It was just a line item on Imperial Metals' balance sheet. Nobody really knew anything about it in the Vancouver or the capital market sense of the word. And nobody really knew about that part of Nevada in the sense of the word. We brought the attention to it. And that was what it needed. We could take it so far, and then we needed to hand it off. And we handed it off to a mid-tier, who ultimately handed it off to a senior. So the right people.
Sure, I get it.
One of the things about the Sterling that is the right people at the right time, we kicked it off. We started the party. When you look at some of the targets that are out there on that property for Nevada, they are very remote. And so the effort and the capital needed to get from this drill up that hill, rock breaking every inch of the way, wildly expensive for a junior to do.
Yeah, okay.
But Anglo, forget it. Let's go for it.
Yeah.
Giddy up. So the right group at the time to advance the asset.
Yeah, 3 times in a row.
Yeah.
Yeah, interesting. And your comment about having to go back and negotiate with the CEO of Coeur speaks to like the many hats that a junior mining CEO has to wear, right? You're a geologist, right? It's like, but you got to do both. You got to do it all, right?
Yeah.
And to be shareholders along the way and all of it. It's a very wide task suite that ends up on your desk. Okay, so the reason Strikepoint Gold caught my attention, the reason I'm a shareholder today was because I watched your journey with Empire, and Strikepoint Gold ticks 3 very important boxes, right? It is, and I'm talking about yourself, right? If we look at a junior mining company, we want to be able to look at the CEO and ask a question: what were they doing before this company? Because hopefully it was related. Hopefully whatever they were doing previously has set them up for success for whatever they're doing now. Were they operating in the same commodity? It's like gold, Strikepoint Gold? Yes, they were. Okay. Was it in a similar or comparable jurisdiction? In this case, yes, Nevada is kind of home to you. You've been there for 15 years, Plus minus, Plus minus. So, it's not, you're not new to Nevada in this hot gold market. You've been there a long time. And then obviously it's not just, were they in this commodity? Were they in that region? But were they operating the same company stage, right? An exploration geologist is an exploration geologist to what you just said. I love that. Right team at the right time. Because you often see people come from a major and start a junior and they use the major as like the marketing tool, right? Like I came from Newmont, so therefore I know, but it's like, okay, but now you've got brand new exploration targets that maybe it's not the same thing, right? Works from a marketing standpoint if people don't know what questions to ask anyway. So you tick those 3 boxes, right? Same commodity, same jurisdiction, same company stage. What caught your attention let's start with Hercules. That's the Nevada project. That's what caught my attention. And I think what I liked about it is that when I heard the story from you the first time, I was super clear on what your mission was, what it was going to cost you, and when you were going to know if you had succeeded or failed, right? Which is super important for junior exploration. So walk us through the Strikepoint story and let's start there.
Well, there's sort of a bit of a musical interlude between Empire and Strikepoint, and that was a vehicle called Eclipse.
That's right.
And Eclipse had the Hercules, and we went out and we drilled it. And the Hercules is an amazing project. Like one of the things I love about Nevada is you can do an awful lot of exploration with Google Earth. And like there's very little vegetation. You can see the rocks, you can see the structure, you can see the alteration. And so I got introduced to this project, and the first thing that I do is you get it on Google Earth, and you're like, okay, there's the drilling, and then you back up. It's like that's a lot of alteration, and you keep backing up and backing up and backing up, and it's like that is a tremendous amount of alteration down there that you can see, and you can see the structures and get an idea of what's going on. Ultimately, we acquired Hercules in the vehicle Eclipse, and we did the first round of drilling. And for lack of a better term, our first round of drilling, we drilled it like everybody else. And if you go up on Hercules, there's a western target that you want to drill from the west, and then an eastern target that you want to drill from the east. And the eastern target always holds together, and the western target was a random number generator. And it was really confusing for us. And we had that first hesitation on that project.
Okay.
And so, the board, we got sort of, some interesting results here. We got some middling results over here. And I was working with a brilliant geologist. And this was right around the time that the Silicon, it was called Silicon Merlin. Now the Arthur Gold story came out. And what happened there, the model of that, it's a caldera margin, so ring structures.
Okay.
And so we applied that model from Sterling, essentially, the next door neighbor, to Hercules. And we said, if that's correct, we've been drilling on this western structure, we've been drilling it backwards.
Okay.
And so we did a second phase of drilling, and everything looks good. Everything looked good in the first drilling, and it's just like, okay, well, we're waiting for results, and then we had an offer to merge with a producer, and it wasn't as good of a deal as what we did with Empire, but it was an offer, and it was a liquid stock. We bought the asset for $1 million, and we had an offer essentially evaluated the asset at $25 million exit. Mm-hmm. Fast forward a little while. Sean Kunkun asked me to join Strikepoint, and I'm like, okay, what I do Nevada. Okay, let's do a Nevada story. And the producer that we sold it to was starting to stumble. Their production asset had a very
Remind me the company.
It was Northern Vertex, and it got rebranded into Elevation.
I remember that. Yeah.
And there was a fairly punitive, I think is the best word to describe, stream on that asset. And they were struggling, and they were struggling, and they were struggling, and ultimately they were headed into CCAA.
And this was like 2022, 2023.
This was 2023, 2024. You could start to see the wheels were rattling on it a little bit.
Yeah, tough gold market.
Exactly. Yeah. And that stream and all the burdens that the mine had on it didn't actually were punitive. No other word for it. And so they went into CCAA, and they're obviously out of dough. And I was able to make an approach and say, "Hey,
get your asset back.
Can I get my asset back?" and live and let die. The line, you got to give the other feller help. The the Beatles song?
Yeah.
Yeah. That's essentially what it is. That's business. And so if somebody's down, unfortunately, you gotta work the situation.
Yeah.
So the most money that they could take without involving the court was $250,000. So they're in the CCAA process. Sold the asset for $25 million, bought it back, 25 million US.
Yeah.
Bought it back for $250,000.
For $1 million, sold for 25. Bought it back for $250,000. Yeah, okay. Got it.
Got it. And so they were in the glue. They're obviously in CCAA. Everything was being reviewed, and they had the claim payment coming up. And so literally, we wrote them the check, got the claim list, which we had in our back pocket, ran to the BLM office, and paid the fees, and away it went. Okay. And this was essentially Labor Day 2024. So
yes.
How I spent my September long weekend that year.
Yeah. Okay. Right away, that story that you just shared, which was, elevation running into distress, having to release an asset, on, for them, unfavorable terms, but for you, favorable. Seems to be the Fiore blueprint. You look at the origin of so many of the companies in that portfolio, Fiore being the organization founded by Frank Giustra and Gord Keep, right? Two legends in the mining business, with some of the biggest mining companies in the world on their resume. And now the Fiore portfolio is just a slew of high-performing, energetic company CEOs, often founded on strategic purchases of distressed assets at the right time, right? Moving in just like that, right? And that's how you got Hercules back for the second time.
Yeah, I mean, the job has changed over time, but the skill set is more or less the same. Like I used to be the geologist that would go out into the field and look for shiny rocks on the ground and pick them up and put them into a bag. Now the job as a CEO is you're looking for opportunity, and so it's that looking and being able to analyze the situation and say they need to do something, and if I flash cash or put pressure or whatever it is, you can sometimes shake an asset loose.
Yeah.
A lot of times you get told to go walk away
go
or
pound sand.
go pound sand. But every once in a while it works and you wind up with a terrific asset.
Okay, so second time you've acquired Hercules.
Yeah.
Why, Mike?
Well, when that second batch of drilling came back with the new model, it worked. And so it was like, the model works. We went 19 for 20 in the second phase of drilling, but we're sold. And so it's gone. It's never to be seen or heard of again. And then when you come back and you see that there's this distressed company and there's an asset, and it's like, hold on a second, I know something about that the market doesn't. There's a new model, there's a new interpretation that works. Okay. So back in the day, we went 19 for 20 on the new interpretation in our second phase of drilling. Early 2025, after we acquired it, we did another round of drilling to test, make sure, and we went 12 for 12. And so,
define 12 for 12 for me. What exactly are you referring to?
Sorry, in the drilling, we hit significant mineralization in every hole. 12
in every hole out of 12.
Yeah. Some of the biggest intercepts that have ever come out of that property, particularly on that western target, 117 meters of 0.47 with 3.5 grams of silver. That's the southernmost intercept ever, and probably the biggest intercept. And so that new model hits every time. And so it's just like, okay, now we've got something, big alteration system, big land package, predictable mineralization, Nevada, open pit heap leach targets. You're onto something. And it's, the context of it is a couple of things. I mean, what has happened in the gold market, with prices moving the way that they have. I did the math a little while ago. A 200-ton haul truck, which is average for Nevada, at $2,000 gold has got about $4,000 worth of gold in the back at a half gram. Okay. You scale that up.
Half a gram. Yeah.
You scale that up and you say, okay, at $4,000 gold, double up. The truck doesn't cost double. The guy running it isn't. His wage hasn't doubled yet, and the cost of running it. So the margins are just expanding quite rapidly right now. And so these big projects in Nevada, big tonnage, high throughput things, there's a tremendous amount of leverage. You know, 100,000 ounce a year mine, which is decent size for Nevada, $1,000 an ounce change in the gold price is $100 million a year in extra profit, because the truck is still the same to operate and all the bibs and bobs and everything else so it's amazing leverage right now on these projects.
And you're pretty clear on the near-term catalyst for Hercules, what you're trying to show the market, right?
Yeah. So what we're doing right now in early March, just on the way into PDAC, we got a draw on site. So as soon as we got our budget, we did a $3 million raise last fall, did our budgets down to Nevada, right into the arms of the drill contractor who know me because I've been there a while. And they say, okay, what do you need? I said, I need a rig sometime in March. Okay, here's the schedule, February 28th.
Okay.
Let's do it.
Yeah.
You know, all right, call the gang up and we're going. And you know, it's the earthworks contractors, the geos, everybody that you know, you get the band back together again, for lack of a better term. We've done this before. We're going up the hill and we're going to drill this thing off. And we worked with the QP and came up with a program. There's a lot of historical drilling. Obviously, you know, God made gold and the devil spreads it around. There's obviously risk to that, but we think that we've got a good model, good predictability, and we should be able to get a nice number out, and that number should come out in Q3 2026.
You're drilling right now?
We are drilling right now, yeah.
We should begin seeing results in the spring then, yeah? Is that fair?
Yeah, I would say...
April, May?
I would say mid-April.
Mid-April?
Is sort of...
Okay.
First batch went in... It's today. I'm going to call it the 8th of March. The first batch went in, and now they're starting to work their way through the labs. So 6 weeks from the 8th, 15th, 23rd April, something like that.
A 30-hole program. You can do this with one rig?
Oh, yeah.
Is that the game plan?
Yeah.
Right. Okay.
Yeah.
We begin seeing results April, mid-April, into May. Early validation, whether or not we're moving in the direction we want to.
Yep.
With the end result being, did you say Q3 2026, you should know enough to complete your maiden resource estimate? Yeah,
so we should have all the results back in hand and into the QP's hand, call it early June.
You did your $3 million raise recently. Are you funded? Is this program funded?
This program's funded, yeah.
Okay, so you'll get that answer before you run out of cash, effectively, right?
Yeah, I mean, there's a few other things that are in the share capital structure. We have some acceleratable warrants, and so that's out there as well. If we trade for more than 10 days above 40 cents, there's accelerated warrants.
Okay.
I believe the number is about 15 million of them, so call it $4.5 million that come into the till.
Okay. Yeah. Can I ask you, like, I don't know how much you can say, but specifics, what is overshooting? What is undershooting? What do you want to find there, Mike?
I think that a significant deposit in Nevada is somewhere around 1 million ounces.
Okay.
Yeah.
Okay. So hitting the target for you or exceeding would be finding 1 million ounces of inferred gold.
Yeah.
Right, at Hercules.
Yeah.
Okay. And we're going to get that answer September-ish. That's what we're hoping for. Okay. You've been clear on the program. I think it's like super easy to understand. Actually, you've got the cash to complete it. We're going to begin to get a sniff in the spring, April, May.
Yeah.
And so people looking for validation before jumping in can do that. I didn't, I've been a shareholder for a couple months now. So appreciate that. And this, I know you showed it to the Doug Casey Roundtable crew recently, and I watched that video and they had a fairly positive response. And that's a very critical crew. I love sitting in on those calls, actually. Yeah. Every now and then I sit in on a panel. It's really fun.
Yeah.
It's a fun exercise. Talk to me about the cap table, Mike. Investors, notable investors, ownership.
Biggest shareholder is Pathfinder. So they're a group out of here in Vancouver.
Yeah.
They've had success with me before.
Yeah.
They were big shareholders of Empire. Yeah. They were big shareholders of Eclipse. They're backing me, for lack of a better
Remind me the principal's name at Pathfinder?
It's Rob Ballard.
Rob Ballard, of course. Yeah. Got it.
And so they're into Strikepoint for me. Eric Sprott is there. He's 2.6 million shares, so 4% of the company.
Eric Sprott's got 4%?
Yeah.
Okay.
And then you get into directors and management. Sean Kuhn and I are sort of neck and neck for 3 and 4 on the largest ownership. Yeah.
Great. Okay. Sean Kincan being your executive chairman.
Correct.
And obviously CEO of Dolly Bard and Silver, who we've had on the podcast for a couple of years now, right? Yeah. Followed the whole story from like 20 mil market cap to post-merger 1.2 billion. Something like this.
Yeah,
what a ride, man.
Yeah.
You know, great team just in general at your office there, the Fiore office. You know, we talk about this a lot on the program, but because I'm a shareholder of all of the companies in your portfolio, if not close.
Yeah.
And the ability to like borrow brain capital, pool resources, learn different marketing strategies that are working or aren't. There's like 40 plus engineers in the office, right? You got lots of smart people there. And just, the sharing of brain capital, such a valuable asset.
It totally is. And I mean, the around the water cooler chatter or learning, is very, very interesting. The engineers they're fun to listen to and sort of just pick their brains on how this all works, and then getting yourself a bit more. The part of the engineering that I find fascinating is the metallurgy part. And there's a gentleman, a couple of them in the office, and it's just amazing to just listen to them talk about, taking that rock to saleable product and the different techniques and weirdo tricks that they can do.
Sure.
And I mean, it's voodoo and witchcraft to a certain extent, the chemistry that they're dealing with, the processing that they're dealing with, but it is just fascinating. And so for me, it's an interesting place to be because I get a lot of exposure and continual learning. And it's also fun because I've taken, guys on tours of Nevada, and Nevada is a special place in the gold mining industry. And it's not very often that you can have, 6 geologists on the side of the road and you say, that mountain range there has got 100 million ounces of gold in it. Proven, probable, mined and shipped out, everything out there. But it's just like, that's special. And then you go to the next mountain range and it's like, okay, that one too, and over there as well. We did a road trip, touring a bunch of the guys of the office through Nevada, and it's like, yeah, guys, like, no doubt, 500 million ounces of gold just went by the windshield. It's just crazy what this is. Yeah.
And then your asset in the Golden Triangle.
Yeah, it's called Willoughby.
Yes.
And it's an early stage thing. When I joined the company, the board had made the decision. We've spent a lot of money on Willoughby, and Porter. Let's do something different. And so Sean, recognizing something different, was me. I was brought in. It's like, okay, I can do the Golden Triangle. I've done it in past lives, but if you really want my expertise and what I bring for both focus, expertise, difference for shareholder, and passion, it's going to be Nevada.
It's Nevada. Okay.
Yeah.
Got it. So Willoughby's there.
Willoughby's there.
Right.
It's in good standing until 2030. If the right offer comes in, we'll deal something with it.
Got it.
Yeah.
Got it. And you got friendly neighbors up there, obviously, right? Cambria is right there. Dolly's right there.
Yeah.
Scotty Resources around the corner. Lots going on. I mean, it's the triangle.
It's the triangle.
Lots happening up there. Yeah. Super clear, Mike. I love the clarity of this story, right? I like the leadership, right? I like that you've been in the neighborhood, right? And very similar mission, right? Early stage exploration to proven economics and sale, right? With Empire. Amazing story, the way you've sort of recycled this Hercules asset once before with Eclipse. Yeah. And got your hands on it again, cheaper than the first time. And now you're funded to really learn about it, right? And show the market what it's got. Yeah.
And I mean, the other thing, about, you asked a question that I didn't really answer, and do I look at, is there anything else out there? And it's like, there's always something out there. As I said, the opportunities that are the things that I look for now as opportunities. And so there's things that are out there, even in a hot gold market, that I think that I can hopefully wrap my hands around. It's difficult. You get told to go pound sand, as we said that earlier, quite a few times. Yeah. But who knows? Maybe you can pull another rabbit out of the hat and get something interesting. And then because we're in Fiore Group, you can get marketing backing all the things that an asset a forgotten asset, like an Empire story needs.
Yeah.
You get that buzz, that statue for the project, and then you can really start to unlock shareholder value. So I'm hoping that sometime soon we can unlock something.
Yeah.
However, those are the things that I can't control. And so, I sort of looking at the world in sort of two broad buckets. The things I can control, executing a safe, successful, technically backed drill program on Hercules. Those are the things that I can control. The stuff that looking for additional opportunities are things that are I can't control. So I don't like to promise what I can't control, but I'm going to do my best to execute on what I can. And so that's sort of how I look at the opportunities and the company right now.
Man, I appreciate that. Yeah. So drills are spinning.
Yeah.
News is coming. Love to get you back on the program.
Yeah.
Maybe like June, July, before the estimate comes out, but after we've got some news to talk about.
Absolutely.
That'd be a good time for an update.
Sounds good.
Hey, thanks so much for coming in, Mike.
No worries at all. Thanks for having me here.
Pleasure, man. All right.